We now enter the phase of the program where we discuss sanctions in other parts of the world, and that provides us a lens with which to understand US sanctions as well. The focus on APAC is about sanctions faced by countries in the region, including against China, whereas sanctions implemented or enforced by China, that story is covered elsewhere. Now, looking at US sanctions, we've looked at US sanction structures. Looking at US sanctions as implemented from the lens of the target and in the light of the cases and situations and prosecutions encountered gives us a deeper understanding of how US sanctions work. So the highlights of the APAC discussion are that APAC countries do not themselves engage in sanctions or export controls in any significant manner. Now, China has in 2019-20 passed some laws supporting sanctions. These are partly active measures and partly counter-sanctioning measures for what it considers as interference in its own internal affairs. Otherwise, for the most part, the countries in APAC are subject to the risk of the long arm of US sanctions. We covered long arm of US sanctions when we looked at the structure of US sanctions. To that extent, the discussion of APAC is more a discussion on the extent of US ability to pursue sanctions extraterritorially, or what might be called secondary sanctions, because the purpose of these sanctions is outside US jurisdiction in a conventional sense of international law. And how does APAC respond? Almost all participants, players in APAC have US in its sights as either a customer or the source for important technology-based products, coveted access to US markets, as the favorite phrase of the US Department of Treasury goes. So the response of APAC is to err on the side of caution. In the structural look at US markets, we looked at what makes the US arm long. One is that US law on sanctions applies to all US entities. It applies to all those who use the US financial system, and it applies to all those who buy or sell American goods and services. And it's important to talk about services, as we will see later on in a case prosecuted by the US, where a service provider in a third party country was impacted and paid several $1 million in fines. Now, the US dollar of world trade, in dollar terms, we are ballpark in the 80% region, 80 plus, just Europe that has a smaller proportion, but that's only because Europe settles in euros. But when you gross aggregate that for the world, we are well over 70% for sure. Now, a trade is denominated in US dollars, and then its settlement involves either a US bank or a US correspondent bank partner of some foreign bank somewhere. And we will see cases that have been successfully prosecuted in that, or a US dollar bank account somewhere in the US. Now, it's important to understand, if Saudi Arabia exports oil to India and the trade is denominated in dollars, then there's a US nexus. That is important to understand. The buyer and seller may not be American, either side, but if the currency involved is dollars, there's a US nexus. Okay. As well, US share of Forex reserves, as Russia discovered. If you are holding all your savings, what is Forex reserves? Forex reserves are a country's savings bank account, so to speak. Largely everyone holds it in US dollar. Then it's within the control of the US, as Vladimir Putin discovered, when a good chunk of Russian Forex reserves, dollar denominated, were blocked by the US Department of Treasury, depriving Russia of the wealth that it needed to pursue its policy in Ukraine and Europe. That's not just bank balances, that could be US money market instruments or holding in US Treasury bills, notes, bonds, and so on and so forth.